All the content on this channel is for education or entertainment purposes only. It does not constitute financial advice. Always remember to conduct your own research. Who is Hector and HANetf?
So Hector is the H in Han, and the N is Nick B. So Nick and I, we've worked together now for 23 years. We first were partners and founders of ETF Securities back in 2003, 2004. And we pretty much made our name for creating the first world gold ETF, which was in Australia with the ticker GOLD. So pretty lot of imagination gone into that ticker. And then we took that business from 0 to 36 billion of assets. We were in places like Japan before iShares. We were in the US. We created the world's first platinum palladium, first oil, world's first thematic equity products, things like clean energy, water, shipping, gold miners. Nick and I were the co-CEOs there. We owned 10% each of that business. We left there as employees, but not shareholders, and set up a business called Boost, which people would know from being relatively famous for creating short leveraged ETPs, things like 3 times long short, FTSE 100 or oil or gold. That suite's all part of the Wisdom Tree suite now, because once we'd set up Wisdom Boost, after about 3 years, we got approached by Wisdom Tree, who wanted to come to Europe, didn't have a business, didn't have any staff. So they said, look, let's do a JV. We rolled Boost into a new business called Wisdom Tree Europe, which we then co-owned with Wisdom Tree. And after 3 years, they bought us out of that. HAN's our 4th business now. It's our first business that's white labeling. White labeling means that we work with other asset managers and we bring their businesses to Europe. They don't want to put boots on the ground, or they don't want to commit the time and energy and cost and want to get up quickly into the market. We are full services solution to them on that basis.
So you're not new to the ETF space then at all?
Now, obviously, I've looked 21. I try to keep the same haircut. And look, I'm definitely what you can call a veteran, but I think it's more by accident than design. Actually, funny enough, prior to ETF Securities, I worked at Susquehanna. I don't know if you know those guys, but they're one of the leading market makers in the world in ETFs and options. They're based in Dublin in Europe, but they're in Barlakin in the US. And they're up there with the Jane Streets or Flow Traders or whatever. And funny enough, the guys who are from that firm are actually in a very famous financial book called New Market Wizards. Jeff Yaz, who's the main partner and main founder, he's in there as one of the top 10 traders of all time, and to the point where he actually owns 15% of TikTok as well. I think he's the largest owner of TikTok, and apart from Elon Musk, I think he's the largest donor to the Republican Party in the US as well. So I was 5 years there as well, so making markets in ETFs. So I'd say I'm a veteran, but I've been around since the start. What's really unique about Han actually is our COO, Manoj Mistry. He was the guy who invented the first ETF in Europe when he was at Merrill Lynch, the Euro Stocks 50 and the Stocks 50 that became part of the iShares suite. They bought it off Merrill Lynch. He actually was ringing the bell recently in Germany to celebrate the 25th year of the first product. And Nick and I created the first ECs ETP, which was Gold Bullion Securities, which is the first gold ETF. So in our firm, we're the only people in Europe who've got the guys who create the first ETP wrapper and the first UCITS wrapper. We're pretty much veterans, but I'd say none of us at the time it was all starting would say the history would pan out like this. We didn't have a grand design, but I think I said to you earlier that I class myself as an ETF Moonie, and I can't think of a better industry to be in. It's grown at a 25% CAGR since the last 25 years, and it ain't stopping anytime soon. I think when I got into ETFs, it was like 10 billion of assets globally. We're now at 16 trillion and growing at 25% a year. It's almost an unstoppable trade, really. Fantastic industry, and glad to see youngsters like yourself getting involved.
Yeah, so you're not new to the ETF space. I think that was a lot of the worries, because it's double the risk. You've got YieldMax and Rec shares coming over, and then it goes through HANetf and then goes to the investor. So a lot of people were worried what would happen if HANetf went down, etc. But I think that may put a lot of mind at ease, knowing that you've been in the space for a long time.
Yeah, I think in a way we reduced the risk quite a lot actually for people, because it's our existing infrastructure. If you're a brand new firm, never been to Europe before, and you come in big cowboy boots on from the US, you think it's one country, one language, one set of taxes, whatever, and it's way more complicated than that. Obviously, Europe is one continent, but there's 30 different things going on from that perspective. And you look at the stats as well. We're 8.5 billion of assets. We grew at 65% last year. We're already up 75% this year. There's 138 brands in the ETF space in Europe, believe it or not. There's around 600 in the US, but there's 138 in Europe. And Han has 25 of them on its platform. So 25 brands, and probably some household names as well. You've probably heard of Jupiter Asset Management. They're on our platform. Guinness Global Investors, they're on our platform. And we've even got the UK government. We've got the Royal Mint, which is Britain's oldest company, 1100 years old, set up by Alfred the Great to finance the Viking Wars, right? And it's the fourth oldest company in the world. And I can promise you that was the highest level of due diligence I've ever been through to generate with the company. Now we've got 1.5 billion of gold with the Royal Mint now. In fact, it's the only product in the world where you can redeem it as a retail investor directly for sovereigns, Britannias and gold bars. So I'd say we're pretty well established. And obviously we've got a lot of regulatory cover as well. We're not just regulated by the FCA, we're regulated by the Central Bank of Ireland in Ireland, and obviously by all the different exchanges across Europe as well. And I think we're on about 11, 12 exchanges now, including Mexico. So the infrastructure we've got is pretty solid, to be honest.
Perfect. Do you think now is the right time to bring ETFs such as YieldMax and covered calls over to Europe?
Do you know what? I can't say I get that much excited now on any launches, but the amount of emails, social media inquiries we've had with particularly YieldMax has been insane. Just meeting people like yourself, mate, is incredibly invigorating and exciting because we're state financial services companies, right? When we touch that sort of social media space. You brought Discord to me. I didn't even know it existed. My kids laugh at me for that because I said, "Have you heard of this thing called Discord?" I said, first of all, they get suspicious. They say, "Why the hell would you want to know about that, Dad? What's going on?" And then secondly, they tell me all about it. But you guys, you're invigorated. There's such a lifeblood and energy, and aggression in a good way, a wanting to do well, a wanting to find different ways. It's almost online entrepreneurialism, actually, when you look at it, what the attitude and the approach is. And I reckon we've had over 2,000 like emails, inquiries, whatever questions. You see it every day. When I get asked on Twitter now from people, and like we were talking about earlier before we started this, the education side of it is just never going to stop. If we've got different ways to get that message out there and educate people, that's the way forward, really. It's super exciting. When you guys went over to the NASDAQ bell ringing, I want to do something similar to that at the LSE, get you guys all down and do a similar thing for one of the future launches we do in this space. But I think this sort of income product is, and actually, if you look back over the last 20 years, what's been frustrating for people like me in the ETF industry is the lack of retail participation in the market. Been very dominated by institutional buyers and also big wealth managers, private banks. And that's just meant it's been dominated by the big 2 or 3 like iShares and Vanguard, etc. And for me, this sort of YieldMax and covered call type space, leverage space is really, that's what I call high conviction trading. Investing is opening that retail angle, really. And I think that's really exciting.
Perfect. So now is the perfect time to bring covered call ETFs to Europe as we've got demand there. So the 30% withholding tax, do you think this is something here to stay when we're looking at single stocks coming from America? Or do you think that is something that we can change?
Yeah, I think there's 2 angles to this for me. One is you could construct a product which is a bit more efficient from a withholding tax perspective. But that would be a brand new product from scratch. And I think a lot of what I've heard from investors, they want access to the actual US product. They want access to the actual MSTY or ULTY that's 5 billion, 6 billion, very liquid, gets all the benefits of the economies of scale that the traders have, all that sort of stuff. Whereas if you build a brand new product, you start from $500,000, it doesn't quite have that efficiency. So there's pros on this and cons on this side, really. And I think our view is that for all it's not perfect, from a withholding tax perspective, giving access to US product is probably more important than with the withholding tax story. I would say that there will be advances which will allow to get a more efficient single stock withholding tax treatment. But I think they're further down the road. It'll need a lot more heavy lifting, a lot more engineering. Because if you think about it, the way MSTY in Europe works is it buys the US product and holds that, and then underlying that, the US product is physically backed because they buy the options, buy the stocks, and get that sort of benefits. Probably the only way you can probably do it in Europe is to do it through swaps. So you may take a little bit of the innovation away there because you've got to have a bank involved in that, and then behind that you've got to have the trading. So I think you will get that sort of benefit, but you may lose a little bit of that creativity, a little bit of that volume, a bit of that scale, bit of that liquidity if you do that. What we are doing is we are looking at ways, whether there's ways to try and reclaim or be more exact about where that income's coming from and try and get that more efficient. But I think it's a way off. We're at the vagaries of the custody world, the IRS, and all those types of guys. You've got to put claims in, all that sort of stuff. Somebody was telling me the other day, they've got an outstanding IRS withholding tax claim for about 2 years old. So that's not going to work for a product where people need to be on the register each month, get paid out. But look, we're always trying to be as innovative as possible. It's just such a shame that UCITS doesn't allow single stocks. The US 40 Act does allow that, whereas UCITS says you have to have a certain amount of diversification, and that's why you go down that route. So I think, being honest and being upfront with everybody, I think if they want access to very successful US products, then it's probably going to be more likely the wrap version at this point in time, because that's going to give them access to that US product. And if you look at it, actually, it's not very much different than if you were holding it directly. Certain investors will always be charged 30% withholding tax. So if they held it directly, they would get that withholding tax. Whereas essentially that you're giving access as if it was in your brokerage account to the US and getting hold of that. So I suppose that's the equation people need to make, is what's the benefits of getting access to the US ETF versus having a version. And I suppose you could probably see that there's competitors out there doing something very similar where they've got a better withholding tax treatment regime. But my view would be maybe don't have the trading expertise, the active management expertise that you're getting access to through the US product. So we'll actually see what you were talking about earlier. We'll see what the total return looks like over time. So I'd say that's probably the way I look at it at this stage. But it is still very early days, right? There's still a long way to go. And as I say, we'll always be looking at ways to innovate and create things to be more effective. But again, I'd also challenge investors to say, look, if we said, look, it'd take us 12 months or 2 years to be able to build this platform, to be singing and all dancing and do everything, or you can have access to MSTY tomorrow, which would you choose? So I suppose that's where we're coming from with it.
And we've seen the assets under management since it's launched. Investors are buying, but I think the only problem is people are used to getting 15% rather than 30 on your US stocks. So there's some investors who haven't invested because of this. And I think if it were 15%, you'd probably double that. I think there is some movement to be made in that. And I think if 15%, it'd be much better.
Maybe even 0%, right? Maybe we could even get to that. But ultimately, as I say, that will require a fair bit of, just to give people a taste of this, I'd say that even just the legal opinion on that tax status will probably cost between 50 to 100 grand to get that right. And obviously when you're white labeling, people like YieldMax, when they're coming out with the first products, they need to see success before they're willing to spend the money to do these things. So I think as I say, you'll get innovation all the time, but it's that quid pro quo, getting things out to market that people want now, because who knows in 2 years' time, right? Or your 1 year time, you know what the story is. But don't get me wrong, we're always looking at this and we're always talking to advisors and figuring ways out. I think I said to you earlier, we account for about 8% of every ETF that's on the planet there's ever been, over 760 ETFs. And every time we're always looking to do things better. And what I really love about this space and you guys is you're not shy at coming forward with your advice and observations on the products. It's not that we don't know, and it's not that we don't see it, right? But also, hopefully, you guys see that we're up front. I know we were a little bit slow on coming with the withholding tax stuff, but we've got to be very careful because we can't give tax advice to people, and everybody's tax situation is different. I mean, we've got investors in Lithuania, in Morocco, in the Nordics, in the UK, and you can't give everybody advice because you don't know everybody's circumstances. So what we put our efforts into was coming up with an FAQ that would be good enough to give everybody what the product can do, and then they can take that to their advisors or whatever and use that from that perspective. So that was the way we tried to address that, rather than say, look, we can't answer every individual's requirements, but what we can do is we can give you the facts on the product, and that's what we do. And those FAQ documents get bigger and bigger all the time as more questions come in. So that's the way we approach it.
Yeah, I think transparency is key here, because if you look at YieldMax, that's the main thing they've focused on, is transparency. And it's worked great. And I think as long as you're transparent about everything, I think that's the way to go about things. And I know we've got issues in Europe when it comes to things like payments and all this kind of stuff. But I think so far it's been all right. We've been a day late on MSTY, but with it coming from the US, I think that's totally fine. With income shares, we actually seen some payments 2 or 3 weeks late when we first started.
I can't comment on that. Like I say to everybody, is we pay on the day we say we're going to pay. And usually the trouble with all this back office stuff, it's not like when you make a bank payment where you can see it hit your account as long as the banks are open. It goes to custodians, and the custodians have to give it to the brokers, and the brokers have to give it to the accounts. And call me suspicious, but I often think when people are sitting on money, they're getting paid interest on it. So if it takes a couple of days to move money on, they get a couple of days interest on that money, right? I just think the system isn't incentivized to do it all real time, in my view. But obviously, it's a lot better than it used to be. I used to be in dividend claims in the late 90s, and places like Italy, you just never got your dividend claims from them, right? So the world's got a lot better. But I do understand where people are coming from this, but all I can say is our job is to pay that dividend on the day it's meant to be paid. And that's what we do. And I've got no problems with anybody checking that. I think nobody can accuse me of not engaging with them on, especially Twitter. I give them answers and I give them what I can. I try to be as honest as I possibly can with them. But it's always, I think, worth it. If you've had confirmation that a dividend's been paid, it's always worth going to your broker and seeing what the story is. But as 212 will take a certain amount of time, hybrids will take a certain amount of time. And it's pretty much a pattern. So you can see after a couple of these payments when you can expect to see it from that perspective.
Yeah, so how hard is the process to get these funds on get these funds onto exchanges and brokers?
You know what? You didn't ask the question I thought you were going to ask there, actually.
No, but it's coming up next, don't worry.
All right. It's very hard. I have two full-time people on it. Some markets like Italy, they just automatically download products as they come into the US, as they come into the exchange. So Borsa Italiana. The UK is very much an arm-twisting thing. And the UK is different because none of the trades really hit the stock exchange. They all go through what they call RSPs, retail service provider, which are retail market makers. You've probably heard of the likes of Winterflood, Peel Hunt. These are very old UK names. And those trades from all the brokers like Hybrids Lansdowne. So Hybrids Lansdowne is a good case in point. Hybrids Lansdowne needs a Peel Hunt and Winterflood set up before they'll onboard the products. And they'll always say they need demand as well. So that's why it's all a bit chicken and egg. And that's why we say to people, we can go and chase Peel Hunt, Winterfloods and Hybrids, but we need you to tell Lansdowne you want the product. So it's all a bit circular. And you just got to stay on it. It's been like that, mate, for 25 years, as long as I've been in the industry. It's very frustrating. But I'd say we're probably much the best at it in the market in terms of we know who we need to talk to. We know what we need to give them information-wise, and we stay on it relentlessly until we get it done. But there's a fine balance. You can't slag these guys off because ultimately you've got to work with them. I've got 760 products I've got out there over time. I've probably got another 500 I need to get on there. So I need to keep them on and obviously they'll be quicker with products that are more retail focused than they will be products that we just done a recent one you might be interested in. Actually, preference shares are coming out fairly soon. We've got a preference shares active ETF coming, which will be quite interesting from a yield perspective. But our idea is that obviously we need to get those onto the platforms as soon as possible. And then you've got others like in Germany, etc., where they're a little bit more pay to play, where some of them will actually say, unless you give us a portion of the management fee, we're not going to onboard these products, so we're not going to make it prominent. So you've got all sorts of different ways and approaches you got to deal with it. But I think we're pretty good at it from that perspective.
Yeah, because I'm just a bit fed up with trading 212 a minute. As we know, the REC shares, crypto, equity, income and growth funds, still not on there. I was on support again Friday, just going round in circles, same thing. Even though crypto ETNs have been approved by the FCA in October.
But there's just equities in these things, and there's a ton of blockchain ETFs out there. We have one. We have Web3 already that's set up. I think, if I'm being honest, I think we should have left crypto out of the name, but I think it's good to have it in the name because it is what it is.
Yeah.
But there's no reason on this planet. By definition, if it's a UCITS, it's allowed everywhere in Europe. That the regulations are what they are, and all it is equities, listed equities. And the LSE and all the markets will have those equities listed. They're not banned. There's no reason for that to be the case at all.
No, but do you know you can buy the single stocks what's inside SEGI on the exchange, but you can't buy it as a basket, which is less risky than buying the single stock?
Yeah, actually, I reckon you could buy the single stock, put it together like a basket. You could hold them exactly the same as the ETF, and they would let you do that rather than hold the ETF. It's mad, but
great.
We'll keep pushing 212 because actually I do think they're a great platform. And I know we've got a guy, the chairman of our board, our fund board, is actually just joined the board of 212, but he doesn't start there for a month. So I'm hoping he can be helpful on that case in point. But we have to wait a little bit of time because he's not going to press the point until he's actually had his first meeting. But yeah, it's definitely something. I think what we probably should do is I can give you the talking points to use for 212, and maybe you can get the community to all coordinate the activity, the responses to them.
We've done this already. There's 800 people inside the Discord, and we've got a community and stuff, and we've I had loads of people, probably hundreds of people who've been on 212 support. At first it was because it had crypto in and now it's not. And then they've turned around and said it's because of risk management because they've got no leg to stand on. It's just circles at the minute, but it's just something we've got to deal with, unfortunately, I think.
Yeah.
So, is there a reason why we brought baskets first? Yes, we have one single stock, which is MSTY, but MSTY has the most assets under management in US, so I can understand the reasoning for bringing MSTY. Do you think baskets suit the European markets more?
I think you'll see both, mate. I think you'll see individual names and you'll see both baskets. Not that I can tell you exactly what's going to happen, but certain discussions we're having with people, you'll see both over time. But I hope we'll have a range, in the range of 15 to 20 of these products out within a year. Hopefully some more issuers coming to market as well. I've just employed a business development guy out there in the US to get out there, and I want him to focus on those high conviction issuers to get more products over here. But to be fair, I could build a business around YieldMax and Rex by themselves because they're so big. Both those firms, I can't talk about exactly which products, but both of them are on to their next products in terms of filings and what they want to do. So you'll see more movement on that going forward. I think both of them want to see a bit of success. I think Rex are over 20 million of assets now with all their products. Max are getting up towards 70 million. So we're getting nearly 100 million mark, which given the competition that's out there has struggled to get close to that number in a couple of years. I think at the time we've been out, I think it's been pretty good from that perspective.
Yeah,
I think what's good about the baskets is the institutional guys are more likely to use that product. So you get more trading and tighter spreads and all that sort of stuff if we have those products as well. So I think they're more of a one-size-fits-all products for the whole market.
Yeah, I think that the A so far has been a success for how long they've been out.
Oh, definitely. And I think hopefully more to come. I know there's a comment made that I wanted to address about people said there's a double fee on MSTY because there's a fee in the US and a fee in Europe. But people have to realise that's a brand new structure in Europe. It's not for free. All the listings, the issuer, all that sort of stuff, that all has to be paid for. And obviously what you don't go when you come up with a product like that is what the assets are going to end up size-wise. So, that fee reflects the fact it's a separate product in Europe. It's not, I think some people call it double dipping. It's not double dipping. If it was double dipping, we'd have it at 1% each side. It's really just representative of the costs and the returns that we're after from that perspective. I think there's 4 or 5 listings behind that product. So you've got to pay that, you've got to pay the market maker, you've got to pay the custodian, you've got to pay the legal fees, you've got to pay the FCA, you've got to pay all these hungry mouths that, irrespective of how much it goes in the product, they're all going to be paid. They don't take risk, but obviously the HAN and the issuer, YieldMax or Rex, they take the risk of whether those products are going to get traction or not. People need to understand that. That was a key thing I needed to get over today.
Yeah, I think a lot of people don't understand the back end of it either. You got to think, as a retail investor, all we see is a product. And if you're not from that space, you just think, they're just trying to take another fee, etc. But there's a lot to get done, especially in Europe. As you said, look how many different countries there is alone, and they've all got to be sorted out. And as we're on the topic of Europe exchanges, what do you think about weekly payments in Europe?
Yeah, that's the interesting one. I think we'd love to do weekly payments tomorrow. The issue really is just the back office, the custodians, the exchanges. And like I said to you, we're always innovating. So we're in very active discussions at the moment for the capability to do that. And there's different challenges for UCITS and for ETNs. I think the UCITS is very geared to paying dividends. It's a fund structure, so they're very geared to do that, even though we think theoretically you can do weekly. It hasn't been tested yet, but I think it's more likely. And ETNs and ETPs never paid a dividend. In fact, it's not even a dividend, it's actually really interest, because an ETP is a note, is a debt security. It's not a fund or an equity. So its correct terminology is a coupon, basically. But we are pressing the custodians and the infrastructure to be able to support that. So we're hoping that over time that will come. But nobody start asking for daily, because I've seen that as well. I think daily, we're a universe away from that. But I think a weekly you'll see definitely in UCITS, I reckon, in the next 6 to 9 months, with ETPs within the next sort of 6 to 12 months, I think. That's what I would say.
The Defiance have filed for a daily lightning fund.
Yeah. I think the US are... the other thing about that is as well, people have to realise, obviously, that it changes the return profile. Because you can have different share classes in Europe, we've even looked at, in a UCITS, whether you could have a a weekly share class and a monthly share class, because the returns will be different. Then you can choose as an investor, do you want monthly or do you want weekly payouts? So there's all sorts of innovation you can look at. But I think dailies, again, like the ETF Auto story, I'll be probably dead and buried before you see that, mate.
Yeah, I understand the weekly concept, because if you've got a job, for example, and you're actually investing for financial freedom, you get paid on a Friday, eventually that income can just change your life, because if it gets paid like your job, then it's like, what's point working, because you've made it.
Even Thursdays, mate. Us Northerners, we live for Thursday, Friday, Saturday, don't we? So we probably need it on the Thursday night, never mind a Friday night. But no, I get it totally. But obviously, money in your pocket is money in your pocket, isn't it? Rather than being in somebody else's pocket. But it's what's really interesting is that this world is really pushing innovation buttons. It really is pushing the boundaries of what's possible. And I think what's really interesting as well is a lot of times in the ETF world, you get things out blind to investors and you hope that they succeed and it's your best guess. But you guys give so much feedback that you almost get market research for free in terms of what the investor wants. And I think that's what's great about the community, is that you get that sort of real-time market research. As an issuer, you've got no excuses but to listen to them and see what you can do as a result of it. And then, as I said, just on the feedback and loop back session, just be honest about what you can and can't do, or when you think you can do it versus when you can't, type scenarios. So I think that's really the best way forward.
Yeah, so this is why transparency is working for YieldMax, because the covered call funds, you can actually track all the funds, track all the calls. You can see where the money is coming in and if they're making their income, whether it's return on capital, and you can see it's actually making you money every week or every month. And I think this is why it's blown up as much as it has, because people can actually see that you can get financial freedom without, for example, if you buy a fund like JetQ by JP Morgan, they hide most of the data. Whereas YieldMax will put on the website every week or every month what's going off with the fund. Data is very important. Transparency is very important. I think this is what people actually love about it.
I agree. And that's why I think that reinforces my point, where if we give access to MSTY in the US, people can see that. If we had a version that was a brand new product, if you had a swap in between you and the product, you might not get that level of transparency because you've got to deal with a bank that's in there. So that's what I'm saying. It's pros and cons really in terms of the structure you're after there, really.
I do a Spaces on a Wednesday with YieldMax, and Mike Venuto told me we're looking at about 5 to 6 by end of year, if it's possible. In Europe, is trying to push for some more funds. I know we had 2 funds what were coming when I went to the NASDAQ event. I actually told Mike Venuto about this, and I think they did a U-turn because of it. We had CHPY come in and LFGY. I think they've done a U-turn on LFGY now because of the crypto situation. So we have 2 more funds coming. Can you reveal which ones they are? If not, I'm going to give you my guess on what I think's coming.
You're going to have to guess because I can't say.
No.
Confidentiality. I'd love to tell you.
Yeah, no problem.
I can't keep secrets normally, but I have to on this one. Sorry, I'm afraid.
No, that's fine. We're going to find out sooner or later, as soon as the filing's finished anyway, because Mike Venuto will let us know on Spaces. So my guess is CHPY is still coming. LFGY, they've done a U-turn on. And they've also said it's going to be a Europe-only fund, so it's going to be a first ever for Europe. And my guess it's going to be some kind of index fund, so it's going to be either a NASDAQ or a SPY, because the only ones that they've got in US are the 0DTE, what's on an index, like the Russell, etc. I'll just leave that with you, and let's see if I'm right or not.
The only clue I'll give you is the one that will be so diversified, I think marries up HAN's strengths and YieldMax's strengths. So I'll leave that with you.
No problem.
You can put that up online and see what guesses we can get coming through on that. But it is brand new. They don't have it in the US.
So this is how I know they did a U-turn on LFGY. They didn't actually tell me this, but they was very reluctant for CHPY to come, which I think, if you look at the semiconductor space, it's grown like massively. The problems with crypto, as we know, up to now. Right, so the next question is the most asked question I get. I must have 25 comments a week for this. ULTY. Could we ever see this in Europe anytime soon?
You'll have to watch this space.
Is that all we're getting?
That's all you're getting.
Could we see HANetf make their own funds at some point rather than Rec Shares or YieldMax or new fund managers coming over?
No, we don't agree exclusivities per se. But what we say to our clients, if we do the distribution for them, because they don't have to do distribution through us, they can just do the product rules. But most people do the distribution. We say to them that, look, we won't ever compete with you. Because in the past, in our previous businesses, we had businesses where we did joint ventures with clients, we did our own products, and it always created problems because you always said you're getting 100% of the revenues on your own products. So therefore, you're going to focus on those. You're not going to give any time and effort to our products. And obviously, when the markets swing around and people see assets going into other products other than their own, they're always looking for reasons. So we just think from a sales force's perspective and a marketing team's perspective, it is important we're not seen to have any conflicts of interest. So we don't, but what we do is we create a monthly list of product ideas. We send them out to our clients in a view that, look, you might not have had this idea, but this is the idea we've got. Do you want to press the button on it? So we do have lots of ideas. When you've had, I mentioned that 8% that Nick and I have done, that 760, but Venuto, who I mentioned before, who created the first ETF in Europe, he was ex-CEO of Deutsche Bank's ETF business. He's done another 450. So we're at about 11, 12%. So when we've got tons of people in the firm who've got 15, 20 years experience as iShares or Vanguard or Van Eck or wherever. So we've got no shortage of ideas in hand, but we just want to keep that clear water between our clients and our own business. So we don't ever want to compete from that perspective. We don't give that as a guarantee or written anywhere, but that's just really our business model from this perspective. But we do have covered call ideas and we have given them to clients. And I think one of these that YieldMax taking up was not quite our idea, but we were certainly part of the process in that. So I think we try to keep it clean from that perspective.
Perfect. It does make sense because competition is competition, and if you're already making revenue either way for both parties, then you don't really want to be stepping on each other's toes. Could we see any high yield ETPs that doesn't focus on the US, so European or global stocks? Or because if you look at most covered call funds, it is literally just US funds.
We are talking to a brand new issuer who's got an interesting structure. They're looking to do like 75% covered call and 25% leverage in the products, and they're looking at single name European stocks as the platform, which I think will be quite interesting. So yeah, I think there'll be no shortage of viewers. The only issue with the markets outside of the US is the options markets aren't quite as developed in Europe or beyond. The US markets are so developed. I think YieldMax, account for about 5% of the daily options flows now in the US market. So I think but there are firms out there that do have options-based income products in the mutual fund space. And obviously lots of the banks, what they call the QIS teams, the quantitative QIS teams, they do a lot of these sort of strategies in structured product form. So I think you might find that world converging and coming over to the ETF world. So I think you'll see a lot of innovation. And obviously what people do is they look, when you were talking about dailies, weeklies, etc. I think a lot of that is because people are trying to find a new space to fill in the market. So I think European stocks, if people like Income Shares and YieldMax and Rex, and anybody else in the space gets some success, I think you'll find that people will spread to that world. I expect the whole thing to be mapped out over time. I think you'll find there'll be hundreds of these products over time, just simply because people want that demand and that choice, really.
Do you think we're going to see people do it on their own, come over, such as Income Shares? So instead of coming through HANetf, do you think we're going to see that too?
Yeah. Look, one of the guys who we get asked about a lot, we have some history with him in the past. I can't say who it is, but we had a little bit of a fight with them over tickers. They had a ticker in the US, we had a ticker in Europe, and they didn't like the fact we were using the same ticker in Europe, even though it's completely legal and there's no copyright issues. Tickers are the property of the exchanges, not the property of the issuer. So I think there's a bit of bad blood there, really, because we stuck up for ourselves in that. But I'd never cut my nose off to spite my face. If they had a good idea and we could find ways to work together, then why not? But I think some people want to do it on their own, even though I think it's a big ask, because ultimately it's 30 countries, languages, taxes, cultures, exchanges. There's a lot of pitfalls that you can go through that you just get rid of if you come to HAN. And also we've had like 3,000 inquiries at HAN since we launched in 2017, right? And we've only worked with 25 firms so far. We turn a lot of people away as well. A lot of people think they've got alchemy and we should pay them rather than they pay us. They've got the best idea ever. They come up with a spreadsheet where they've held 5 stocks for 10 years and they've outperformed Warren Buffett type thing, when we should buy into that. So you get those all the way through to the other end of the market. We don't particularly do that well, or where they want to have a 3 basis point S&P 500 product, and you're going to need 20 billion of assets before you even break even on that, right? But no, we like to be at the end where it's a bit more high touch, a bit more brand orientation, a good story to tell. But I mean, we won't get everybody.
Yeah, so on that basis, we've got Rex Shares and YieldMax so far. Is there a reason why you partnered with these, or are these just the 2 companies that want to come over so far?
We know both of them very well. As I mentioned to you, Kevin Gopal, who's at Rex, he was at BMO, he's known us for a long time. He's wanted to work with us for a long time as well. And then obviously the Max guys, we've known them in various guises. Funny enough, Tidal do quite a bit of our portfolio management for our existing clients as well. So they're a service provider already to Han and have been for a long time. So we've known them for a long time as well. But we do know the others as well. So I suspect we will do some work with some other guys over time. I suspect we'll have 4 or 5 covered call. I can't see us having many more than that because I think there won't be enough space on the platform otherwise. And I think 4 or 5 will get us to the 30, 40, 50 products over time, which I think is a big offering, really. So I think we'll be pretty happy with that.
Yeah, and you've got to be a bit careful when it comes to competition as well. You don't want to be clogging the space up too much. And because there's only so much you'll be able to handle as well as a business.
We only want to work with people we think we're going to get 100 million assets really per fund. So we only want to work with committed partners. That sort of weeds out quite a few people as well. Because a lot of people, they just want to throw something else at the wall, see if it sticks, and if it doesn't, they run out as quickly as they've come in. But all our agreements are 3 to 5 year agreements. We want a long-term partnership with the firms we work with. That's for sure. You probably know we've got a big relationship in the crypto space as well. With Bitwise, we have 1.4 billion of Bitcoin, whichever one, BTCE, whichever one we had to buy in October in the UK. But we got the only leveraged crypto products in Europe as well. We've got 2 times long short Bitcoin, 2 times long Ethereum as well. Again, we decided to only work with a couple of parties in that space because it's also equally important to be curated as well and get committed partners. So that's the way we work, really.
Talking about crypto, do you think we're going to see after October, the FCA in the UK has just released that year, they've just approved it. Do you think we're going to see Bitcoin ETPs and maybe Bitcoin income ETP?
Yeah.
Because I think that is very high on the spectrum. To get, for example, BTCI has done very good for Bitcoin income related.
I think you'll find the FCA will only allow the physically backed Delta One products to begin with. And then I think they'll broaden the net over time. So you might see it outside the LSE for a while. So you might see it on Zetra or other exchanges.
I think it's a big step for the crypto space moving into next year. There's a lot of growth to be had. If you just look at America, look how much that's actually gone up in just the crypto space on the stock market is absolutely huge.
Insane. It's insane. I remember when we created it, and it's going through the same process when we created the gold. Nobody had gold in their portfolios before we created gold ETFs, and we spent 10 years telling people, like, buy 3 to 7%, you know, what it did for your Sharpe ratio in your efficient frontier in your portfolio. And now people laugh at you if you didn't have gold in your allocation, whether that's 2% or 10%, whatever it is. Crypto's going to go the same way. There's going to be this argument about sticking in your portfolio, having 2 to 10%, and how much you should have as a diversifier. But it's going to go the same route.
Yep. Have you got any goals for HANetfs in the income space?
Yeah, I think it's going to be a multi-billion-dollar business for us in the same way that defense ETFs have been, gold has been, crypto's been. I think these areas where we add value in terms of research and expertise, I think they'll be our big areas. And I think we've had a good start with this, and I think we've proved concept. And I think we've got 2 committed partners who just need to see a bit of success, and then they're going to put their foot to the metal. And I think they'll almost create the space themselves. No offense to the current competition that's out there. I think the heft these guys have and the footprint, they're a different kettle of fish. But you always in these spaces always need an iShares or a Vanguard or whatever to spend all the money and push the way. And to a certain extent, JP Morgan's done that to a certain extent, even though I think they dress these products up more as sort of active ETFs than they have covered call. But I think YieldMax and Rex can be those guys who can Vanguard and be the attack dogs for this space really and get it more well known.
Yeah, I'll give you my personal view. I think income shares could actually make it work for UK investors because you don't pay any tax. You've got an ISA which you pay no tax in. You've got 0% withholding tax. But the problem with that is they need to get the strategy right and they need to have the right traders, and that's not what we've seen so far. So there's plenty of competition to be had within the space. It's just, I think it's very early days so far for this industry, and I think we're going to see it over the next couple of years really pan out. If you just look at YieldMax in the last 2 years, let's say, I mean, look how the assets under management, Tidal are 40 billion, YieldMax are 15 billion since 2022. So,
I think they're 18 now.
And now they've got in Europe.
No, agreed. No, it's interesting times. I actually think, we talk a lot about Misty, but I actually think YMAG and YMAG's a great product. One thing I think people need to compare these things with is annuities as well. Because people talk about it a lot, like freeing you up early in your life, but actually, I think they're quite a good alternative to annuities when you've got pensions. Because annuities just eats into your capital and just pays you a set income. Whereas in a way, something like YieldMax is even better than that because you've got a chance to preserve some of your capital, and it's still going to pay, and it's going to pay you out way more distribution rate than an annuity is going to pay you. So I think in some ways they could be really helpful for the retiree as well, the DIY investor retiree who wants to have that sort of income stream as well. It could be really exciting.
Yeah, and that's one thing it really opened my eyes when I went to America and I seen how people look at investments over there compared to like in the UK. It's unbelievable how much stick I get on trading 212 socials for being in the high yield space. It's just because it's all new. People don't understand it. Like education is absolutely key when it comes to this, and people just look at a chart and see it trending down and think it's a bad investment when total return is actually the main key. So yeah, there's people in America who do that though. They look at it like that and they just want the income.
Yeah, and look, I think for me, if you look at Europe's going to catch up quick here because there's a couple of things for me. One is everyone says UK hasn't got a culture of saving or investing. It's got a massive culture to CFD and spread betting, right? And that's a fool's game. If you look at any advert from a CFD provider, it says 95% of their investors will lose 95% of their money in 9 days. When you see that, they're almost like those cigarette adverts where they show a burning lung or whatever. But people still wade into that sort of high leverage trading. So I think a lot of that money will come over into the ETF world. Then you've got this whole thing in Europe where the social welfare system's breaking down, right? Where people realise they're going to have to pay for their health, going to have to pay for their retirement. The state isn't going to be there for everything. And people want to get ahead of that. They want to invest for that and take charge of their own destiny. And I always call ETFs a bit like a black hole, right? That initially it was passive index products were getting sucked into the black hole. Then it was smart beta, thematics. Now it's active, structured product world. It's all getting sucked into this ETF world. And as I say, because it's got this democracy, right? If I said to my son, if you buy a mutual fund, you've got to fill a form in, wait a couple of days and get your price back, right? If you imagine going into a garage, in a car garage, and say, I want to buy that car, and the guy, you say, how much is it? And the guy says, well, you'll have to buy it first, and I'll tell you tomorrow how much it costs. So if I said to my son, look, you've got to do that, he'd say, Dad, I ain't doing that. But he'd say, I want to do everything on my phone. It needs to be all on there. It needs all these Amazon Prime gratification. That's ETFs, right? They're e-commerce. They're e-commerce friendly. And as I say, my mum can buy the one share that Fidelity can buy 1 million shares against the same gig. So I think it's actually a liberation for it's that democracy of bringing the power of these vehicles to the end investor. And they say, I want to buy gold. I don't have to buy it in a gold bar, hide it, stick it under the bed, or run off to Norway and sit down with my gun and wait for the world to end or whatever. You can have all this power, and the income products, I think, are like an extension of that. And they're actually saying to people, look, I'm not going to wait for anybody to give me a handout. I'm going to take charge now. And you see all these guys showing their portfolios. I did this, I did that. I've generated this amount of wealth. I've hit my first 100 grand, or I've done. But it's actually incredible when you look at it. And nobody's waiting for Money Week or Investors Chronicle or whatever to tell them that. They're getting it firsthand through the social media world. And I think it's just very liberating. I really think it's quite energizing, really.
Yeah, and you can draw your own path. I think that's the main thing now. As before, you used to have to ring your broker up before the internet and stuff like that.
You used to have to write to them. Sometimes. When I did my first job as a graduate trainee at London Stock Exchange in 1989, all the young lads, they used to send through this room called scrutiny. It was a room of 100 middle-aged women with perfume. We call it fluffy jumpers. And they would, every trade that was done on the exchange, they would have this deposit set of documents that had to come through, and they had to put these documents together to settle the trade. And everything settled every 2 weeks. And the first time I went, I had to run through this room. But the mechanical nature of it and the paper intensity of it was just amazing. And we're so far from that now, and ETFs just lean into all that. Even from a cost perspective as well. But you can still pay 1.5%, 2% for that. And all you're getting is like the FTSE 100 or the S&P 500. But you can buy an S&P 500 ETF now for 3 basis points.
Yeah.
And you look at any empirical study, if you have a pension over 40 years, 50 years, and you save 50 basis points in fees, that pension will be worth 3 times as much, all things being equal, after that period of time, just through compounding.
Yeah.
And that, to me, the government should be all over that, because forget the state pension, that will liberate and create so much wealth for the UK and beyond. There can't be anything wrong with that.
Yeah. So I've got another question for you. The two new YieldMax funds that are coming, I know they're currently in filing, but is there a timescale round about when we're going to see them?
I would hopefully by early October, I'd hope.
Is there any more fund managers in the pipeline?
I mentioned the guys on the leverage and covered call stuff. We have got one who's looking at some more index-based products. That will be our third issuer. They're only looking to do one product at the moment. But I think you'll find this stuff accelerating over the next 6 months, definitely.
I've got two requests to tell you on fund managers. One is NEO's, highly requested, QQQI, BTCI, etc. I get this a lot. People want NEO's funds over it. And Roundhill. Although we've spoke to Roundhill and they're not looking to enter the European markets yet. But what is the problem with leverage and income products? Because FCA seem to block it at the moment.
I don't see why there should be a problem in an ETC wrapper, an ETN wrapper. There's nothing governing those products. From a UCITS has very strict rules of what you can and can't do, but ETNs are pretty straightforward, except for the crypto world, which obviously is changing. That's the only things I've ever heard of. But I've never heard of anybody saying that you can't do that. Saying that, I've not dug into it in detail, but given my experience, I don't see any issues with that.
Right, because obviously we've got leverage shares, but Roundhill just do leverage and swaps.
Some of the full details that they're around us line up, to be honest. So I couldn't really comment on that. No. But the business dev guy I've got started in the US, he's based in Boston. He'll be focusing on that space. He'll be talking to all those issuers, smartish really. That'll definitely be an area we want to attack. Right,
so what kind of challenges do we face getting funds into Europe? For example, why can't YieldMax just bring all the funds over, like tomorrow?
Just economics, really. There's two aspects to it. If they're just wraps, then it's quite straightforward for them because they don't have to do any investment management because it's being done by the underlying fund. If they're UCITS, then they have to set up as the investment manager, the portfolio manager to do that. It's a bit more work in that. So I'd say there's logistics issues on the UCITS. And then I'd say just on the ETPs, it's just economics, really. It's just whether they want. I'm not going to put words in their mouth. But I'd say they're making so much money in the US that they're probably thinking, how much money do we want to put towards Europe? We got 70, 80 million here in short time. But when the US we bring out a product, we might have $1 billion in 2 weeks or a month or whatever it is. So they've got tons of revenue. They're probably just thinking, actually, Europe might be X percent of our approach, where the US is going to be Y percent. So I'd say that's probably their major push. And if you look at Europe, Europe's 2.7 trillion of assets now. I think the US is like 12 trillion of assets. So the US is like 4 to 5 times the size. So I'd say the opportunity, the way they look at it, is probably the opportunity is probably significantly bigger over here. But I still think they've done the baby steps to prove concept. So I think you'll see them accelerate now.
Europe's an untapped market right now. This is a whole new concept.
But also, if you think about it, Europe's double the population. Similar wealth demographic, all the same sorts of problems that the US has got, we've got from a savings and a investment perspective. So Europe's growing at 25% as well every year, compounding. We're just 4 to 5 years behind, that's all. So we could catch up and take over the US eventually.
I think the most important thing is education, like we've been talking about. I think there's less education in Europe compared to America. On the money side of things, they're just so far in front of us.
A much bigger culture, a much bigger self-investing culture as well.
Yeah.
So
everything's about money. When I went over there, I realised how much people love Bitcoin and they're just so wrapped in the investing world that everyone invests. It's like you can walk down the street and talk to people and probably 1 out of 2 people might invest at 50 in UK.
They all know what ETFs are as well. They talk about ETF tickers like it's a stock. People talk about GLD, which is the biggest gold ETF. And then they'll talk about gold as if they're two different things.
So my next question, is there anything you want investors to know that haven't already been through? Just because education is very important in high yield funds.
No, I think we've covered all the ground that I think we had. And I just want to say I really appreciate the community. And I think on the main, everybody's positive and just wanted to get to the right answers. And hopefully we can continue that dialogue. And I think one thing which I think we've got, but we probably should develop a little bit more, is just the coordinated onboarding with brokers. So when we bring out a new product, maybe we get like a cohort of people. Maybe there's a way to sort of book in everybody that uses 212, Hargreaves, whatever. So we get like a full list of people that we can then say, okay, send this email to Hargreaves, send this to 212. And I think that will help a lot to get things moving. That's the only thing I thought we could maybe organise the community a little bit. So it gets there, but it would be good to be able to just have different groups where you say, who's the Hargreaves group, who's the lobby group for those brokers. So that's one thing I thought might be quite useful.
Have you got any questions for investors or any questions for me that you'd like answering?
Yeah, I think just keep doing what you're doing, mate. I think you describe things in a very coherent way for the community. And I think, judging by the questions I see, all the areas where people don't quite get it. And I think there was a recent one where you said, look, I've just answered that in one of my videos, go and have a look. I think that's key to it, really. But I think just keep holding our feet to the fire as well. Don't be afraid to ask the questions. I think you deserve it, we deserve it to have that dialogue that makes us create the best possible products we can. And as I say, you guys are great for market research, and that's just such a massive thing for us, because the last thing you want to do, if you bring out a fund, get it wrong, it's 300 grand, right? And that's the sort of cost you got to get to break even to cover those costs, and that's annually, right? So if you keep a fund out for 3 years, that's nearly $1 million. So the more accurate we can be, the better it is for us and the better it is for you guys from that perspective.
Yep, all we want is the best products possible, and we'll keep pushing for that because we've got them out in America and we want them in the UK and Europe. It's as simple as that. So we're just going to keep pushing until we get what we want.
Music to my ears.
So Thank you very much, Hector. It's been a pleasure talking to you. And maybe next time we'll do it on a live stream and we can get people asking questions.
Fair enough. I think we're going to start doing our own Twitter stuff as well. We'll get you on that.
Perfect. Sounds good.
All right, mate. You take care.